Buddy. How are you all doing today? And welcome back to another lesson of learning how to trade with me, your host, and I guess you can call me your instructor, Philcon. Today, we're going to be talking about Fibonacci retracement and obtaining targets. I hope you guys have had a splendid time throughout these lessons so far. I really firmly believe that if you put in a lot of hard work, if you try to be better than the next guy, if you wake up every day saying to yourself that I will learn how to trade, I will know how to trade, and I will be successful. If you believe in yourself, like how I believe that you have the power to change your life, like how my life has been changed because of cryptocurrency, specifically Bitcoin, specifically because of Ethereum, or even OmiseGo, Go, Ripple, EOS, IOTA. I do believe that you guys will also achieve the same type of success as well. Let me just lower my camera here a little bit here. All right, guys. So we've had a great time learning so many lessons so far. And as you guys have noticed, it's getting even more advanced and advanced and advanced and advanced. Because as we learn about more different types of indicators and tools to assist us in trading, we have an arsenal of skills and weapons up our sleeves so that we know exactly which one we should be using, which one we shouldn't be using as well, right? And eventually we know which ones are best to use in some circumstances, while other ones might not be as good to use in other types of circumstances. So I hope that you guys have taken a lot away from these lessons, but you have to also keep in mind that you're only going to be as good as how much work you actually put into learning how to trade. If you don't put in a lot of hard work and a lot of time, if you don't back test and actually test these theories that I'm teaching you, then you might not be as successful as a trader as you might like to be. So I highly, highly encourage you guys to put in tons of time and effort into learning how to trade properly, and make sure, guys, that you're sticking to your stop loss, right? These valuable lessons that you get under your belt, they're only going to increase in terms of exponentially growing your skills if you keep making sure that you stick to your stop loss, if you keep making sure that you realize that every time you do lose, it's only going to improve you as a trader over time. We have to acknowledge the fact that trading is a journey, it's a marathon, it's a life learning process, right? I know for a fact that I've got a lot of ways to go as well, and I've set goals to myself for myself. I know exactly where I want to be a few years from now, right? Which is going to be at a much more advanced level of trading than where I am currently right now. I firmly believe that nobody ever becomes like a true professional in trading, right? They don't really become an expert in trading because it takes a lot of hard work and a lot of time. So please make sure that you guys don't feel bad about your losses whatsoever. Just to take them as the most valuable experience that you can come across in trading, because trading will only make you a better trader, right? Or sorry, losing will only make you a better trader. And also, you stick to your stop loss, guys, right? You stick to your risk to reward ratios always. You make sure that you know how to take these stop losses and how to just close your eyes, guys. Close your eyes. Click on that X button to close your position there and just take a deep breath. If you guys ever lose, don't ever try to jump into a trade right away. Make sure that you're actually taking a break in between your trades, because if you over trade, the last thing that you want to happen is to go into another trade with the same type of emotions from your loss already. So every time I lose a trade, I go hang out with my dog. I go, have a bite. I do something outside of the home or outside of the condo, because I know that I want to refresh in my mind again, right? We have to make sure we throw our emotions out the window, because once we throw our emotions out the window there, you guys are going to understand that we just stick to risk to reward ratios, and the risk to reward ratios, they will start to dictate how our trades should be, and they will literally throw your emotions out the window. There will be no more fear, there will be no more greed, there will be no more FOMO whatsoever. So let's get into Fibonacci retracement and obtaining targets and how we actually get them done, all right? So what is Fibonacci retracement and how are these numbers derived, okay? Well, first of all, to use the Fibonacci retracement tool, it's right in here. So you left click on this little submenu button arrow on the side right there. And the first one that you'll see here is right around, you'll see the pitchfork button, okay? So it's the third one from the top. Left click right there on the tiny little arrow that brings up the subcontext menu. Then go to your Fibonacci retracement tool. I highly recommend that you star it. When you star it, if you right click and then you go to drawing tools right there, favorite drawing tools, this menu will come up right here and your favorite tools will actually come up. So what is Fibonacci retracement? Fibonacci retracement is a method where you take the most extreme points of lows and highs, or highs and lows, and you get a you're using a sequence of numbers from the Fibonacci set of numbers, right? The Fibonacci sequence, and it's giving you a specific ratio based on what the sequence is, right? So let's just draw it to give you guys an example. And I'm going to draw it for you guys in a very easy way so we can easily understand. Now, understanding the math behind it and how it's derived, irrelevant, guys. If you guys are curious about learning how these numbers are actually derived rather than how it's used, definitely spend a little bit of time on YouTube, right? So the Fibonacci set of sequence, especially this particular number right here, called the golden ratio. The golden ratio refers to this number right there. I'm going to put a bunch of these other points in here as well, okay? So this one's got a lot of points right there, okay? So it'll go basically from 0 to 100. Let's put in the 0 point as well so you guys see, and the 100. So this number right there, the golden ratio, refers to 0.618, or also known as 61.8%. That is probably the most magical number in the history of the Fibonacci retracement, okay? In all of the Fibonacci numbers, the golden ratio is derived by taking two numbers and just dividing it by each other, which gives you that specific ratio. Now, the golden ratio, 618, is actually found everywhere in the universe, whether it's from the way the galaxies are actually shaped and spiraled, to the way sand and seashells are shaped, to the ways our body is actually proportional with our arms and our length to each other, to the way architects design buildings, even to the way our genes, our DNA, okay? Our actual DNA and our genes are actually spiraled according to the Fibonacci ratio of golden ratio as well. So naturally, what we'll see is we'll also see it in trading as well, in the stock market. It is found literally everywhere in nature, and we cannot help but find them everywhere as well. And when we find it in the stocks, in trading, it's probably one of the most beautiful things that you guys will ever see. So let's get into this first of all, okay? Let's get into an example, right? So let's just say we draw a random line like that. So if it is on an uptrend, okay, guys, what you do is you click on your Fibonacci retracement tool first, and then what you do is you click on the bottom point. It doesn't need to be right on it, as long as it's on the same axis right here, okay? As long as it's on the same axis, which is the x-axis, right around here, that goes left to the right here, okay? You can click it along anywhere on the x-axis, and then click anywhere along the x-axis that also is on the same line, on the same y line as right here as well, okay? So what you'll see is a bunch of numbers. So what 236 refers to is 23.6%. What 38.2 refers to is 38.2%, right? And 0.5 would be 50%. 618 right there would be 61.8%, right? And double click on it, guys. Choose any spot of these. Make sure you also have something in here called the golden pocket, okay? The golden pocket is a region of the 0.65% or 65%, right? It's located in between right here, right? This is called the golden pocket, which a lot of the times a retracement can happen and hit right to that target and then bounce off of it. So the 786 will refer to retracing 78.6%. Then the 100% would refer to retracing 100%, right? Just so you guys know. So what you want to do is, let's just say it fell down to 100 right there, okay, at the 1 level. So what do you guys think that this refers to? And percentage-wise, what did this retrace to? So this retraced 100%, right? So if you take two extreme points, you take the bottom and you take the top of two extreme points, and then you make sure that you draw your Fibonacci retracement from where it began to where it went up. So then if it went down to all the way here, okay, just as an example, went back down to here, that would be considering it retracing 100%. If it actually only went down to here, that would refer to it retracing 78.6%. if it went down to around this right here, the 68 or 61.8%, that would refer to it retracing 61.8%, right? Of this wave right here relative to this wave. So if you've noticed right here, just as an example, right here is 78%, right? If I went from the top right there to the bottom, or actually, let's see if it's better this way. So if this right here was 100%, okay, we'll just use an example. 100%, well, 78.6% of that 100 is what it's referring to. But overall, what it's referring to is it's going retracing 100% there, 78.6% right there, 61.8% right there, and here's the middle mark, where this right here is exactly the middle. So there's 50% up here, and there's also, 50% down here as well. So both ways is 50%, right? That has to make 100% sense for you guys to understand that. So then if it retraced to right here, just as an example, the 38.2%, well, that's 38.2% of the Fibonacci numbers, right? If it retraced to right here, that's 23.6%. So that's what it refers to, just to understand it in a very simple nutshell. And at each point of these numbers, there's usually some sort of reaction in the market, okay? That's really important for you guys to understand that. There's usually some sort of reaction when it reaches this specific point of these ratios. So let's get into a lot of examples. Examples are the best way to learn, guys, right? So let's just say, for example, we go to Bitcoin, okay? We go to Bitcoin and we take two extreme points. As you guys know, there was a massive run up over here, right? Massive run up, as you guys saw. So let's take a look at this in high detail. So this point right here would mean that it retraced to 23.6%. This region here, if you take a look very closely, you'll see that there was a strong market reaction, first of all, to bounce off of this zone, right? So whenever it gets to one of these zones, you're basically waiting for confirmation to see if there's a possible bounce. What you wanted to get to, guys, is the golden ratio, okay? Or the golden pocket zone. I kid you not. That is where you would like to get it to every single time you trade. If you take your chance every single time at the golden pocket, there's no doubt in my mind that you guys are going to be a successful trader and you'll be profitable over time. So as it gets closer and closer and closer to the golden ratio, which is a 61.8% level, what you want to do is most certainly take a chance, because it will overall increase your probability of winning over time. I've got no doubt in my mind that you guys will eventually win over time, because the golden ratio is the most natural set of sequence in nature, or not most natural set of sequence, but it's a set of numbers that forms that specific ratio. And it's a very natural sequence or natural ratio in general. And it's found everywhere in nature, like from the examples I gave you earlier in the video. You guys definitely want to take your chance at the golden ratio. It is the most powerful thing that you can find in the stock market, okay? And what you guys will notice here, for example, is at the 0.5 level as well, there was a really large reaction, right? So for a day trader, that might have been worthwhile, or even for swing trading. So just as an example, if you guys actually bought, for just really quick example, okay? If you guys bought at the 382 level, right around here, and you set your stop loss for, say, the 0.5 level, that's a pretty big loss, in my opinion, right? And you were but still, just up, not for percentage wise, but for specific risk to reward ratios, right? That you would have, you would have made a pretty good profit there if you just went for like a 1-to-1 risk to reward ratio, just as an example, ignoring percentage, right? If you actually, for example, right here as well, if you set it for, say, I don't know, a 2-to-1 risk to reward ratio up here, right? Pretty big percentage loss, but just talking specifically about the risk to reward ratio in general, right? If you bought at the 0.5 level, you would have done really well. If you bought it at the golden ratio, which is where a lot of people were hoping for it, right? Right around the golden pocket. So the pocket tries to catch that specific region, okay? So notice that how we're getting a reaction at every single point right here, okay? It's trying to break down out of it, but the golden ratio zone right over here, it had too strong of a natural reaction in the market. And because it had too strong of a natural reaction, well, great. Then we're actually going to see it bounce from there, right? So how do we obtain targets? That's very important to understand. So on the downside, okay, we are taking our Fibonacci from up here, or sorry, from down here, all the way to up there, right? And that's how we're doing it on the upside. But on the downside, you might want to take it, for example, say from here, right? You take it from the top and then you take it to the bottom as well, to where it originally was right there. Now, my personal targets are always between 0.5 and 382 right there. So that is how we obtain targets, guys. We obtain targets based on where Fibonacci could possibly create a resistance. Every time we go to a Fibonacci ratio of one of these Fibonacci numbers, we're very likely to encounter some sort of support or resistance, even if very temporary. Most of the time, we'll definitely find support or resistance, very likely, but sometimes it'll actually just shoot through some specific regions. So now that you've entered a trade right around here, okay, you've entered a trade right around here, for example, say near the golden pocket range, pretty big loss if you ask me, right? But this is more so an investor type of strategy where you're holding it for a longer term time period. So let's just say, for example, here is really risky to enter, guys. You don't want to be adding too much to the position, because where's your stop loss, right? Where's your stop loss? Would you put your stop loss below these guys? Because that's a really big loss at 21%, right? So once you confirm some sort of confirmation of an uptrend, which was pretty much this guy right there, right? This guy confirmed it right there for an uptrend, okay? No doubt in my mind that this guy was the one that confirmed it, this huge hammer. So you would have set your stop loss, I'd say, for, slightly below this candle. You would have entered probably in the third candle upwards. So maybe if you're risking about 5, maybe 3%, we'll say, about 4% almost, right? And you would have targeted the 382 or the 0.5 region. You would basically look for signs of bearish reversal, and you would have basically sold when you did find it. So the best way to have played this would be to say, okay, well, this is a cluster region of resistances, and we simply could not break above it. The 0.5 actually reached it. It reached the 0.5 Fibonacci target right here, right? This is the 0.5 Fibonacci target, and you would have actually made 54% if you targeted 0.5. If you targeted the 382 region, then you would have, this one right there, you would have actually hit about 37% gain. So that was a really, really interesting trade in my personal opinion. And I made some really good money off of that trade, guys. So let's look at another examples. We're just going to get through so many examples so you guys understand. So where do you guys think right here, okay? Right here is the most two extreme bottoms and the two most extreme tops. Yeah, if you said pretty much right there, and right there, you nailed it. So you take your Fibonacci retracement tool, you click on the bottom, and then you click on the top, like near the top, around that range. And what you see is that right here's the 0.5 level where it had a very, very strong reaction so far. So what I recommend to people always is to allocate a specific percentage to buy perhaps at the 0.5 level, right? And then if it drops lower, you would want to buy more than what you bought at 0.5. So what I personally like to do is I like to buy about 10 to 25% of my position size at the 0.5 Fibonacci level. And then once it hits the 0.5 Fibonacci level, if it keeps going down, I will ladder my buys and get that best average price out there to the 618 level, right? Because I'm always going to take these possible bounces. So if you actually bought where I recommended at the 0.5 Fibonacci level, or right between these regions right here, you would have actually made some really good money already, right? In the past few days, just as an example, okay? So right here is where you could have bought. And then if you enter that position, it's a pretty good trade, guys, right? You always want to take these chances at the 0.5 Fibonacci level. So if I go on the daily right here, okay, a lot of people are still in a really good position right now where they bought around the 79.50 range, like how I did, right? I was basically laddering my buys and I was laddering my buys to come just down from the 0.5 region. That's how I was able to get the best average price right there. So I'm pretty hopeful on a bounce. I'm fairly bullish on it right now. I believe that it's going to make some sort of newer highs, and it's just a matter of time until we see how high this is going to get, in my opinion. So that's just a way. And how do we obtain targets, guys? All right, I'm going to show you guys how to obtain targets using Fibonacci extensions, just as an example early in this video to give you a taste. So Fibonacci extension, you click on here, right? You click on your Fibonacci extension tool. You click on the first point. You click on the second point, and then the second high, and then you click on the third point, which was the next low. So the first low, the second high, and then the thirdly, or sorry, the first one is the low, second one is the high, and the third one is the next low. So the next target for this one, using a 1-to-1 extension, which means it's going to move about 100% of the distance, you can expect it around 11,500. So I'm pretty hopeful that it's going to reach some really nice numbers very soon. It's just a matter of time. Even if it gets to 7,700, there's still a good chance of it hitting a very big number around the 11,300 range over there. So let's get into some even more examples. Fibonacci is one of the coolest things, and I love to talk about it because I find that it's been helping me make a lot of targets recently. All right, let's look at Litecoin. Litecoin was definitely a very profitable coin to be trading based on Fibonacci retracement. And I'm going to show you guys a really cool thing, especially since the beginning of these particular places on February 6th, right? So what you want to do, make sure that you guys have your drawing tools out here, okay, your favorite drawing tools, and you star it because it's just a lot easier to access. So I'm going to go to right here, just as an example, okay? So if you guys have noticed, at every single range, there was almost a reaction, okay? Not quite a reaction at the 0.5 actually, but we do see, actually, yeah, we see a reaction here around the 382 level. We see a reaction at the 0.5 level, but what we see, the strongest reaction was right here, okay? So sometimes, guys, patience. Patience is a virtue, right? You have to make sure that you're extremely patient sometimes. And sometimes people only make one trade a month. If you guys had waited, right, throughout this month period, or even in March, for example, okay, you guys could have caught this particular one. If it went up there, and it came all the way down to over here, well, you guys could have targeted like this. Let me just show you very quickly, okay? You take your fib range right around over here, okay? So you're taking it from two extreme points. The first one would be from down here to up there, right? To up there. And then if you actually saw it bounce and get to this golden pocket range right here, take a look at it, guys. It literally got to the golden pocket range, right? I'll delete this first of all. So at the golden ratio, guys, you always want to take a chance, okay? You always want to take a chance and enter. You don't know your exact risk to reward ratio yet, but what you do is you take the next point up there, the highest point, right? And then you take it to the lowest point right here. And then your target could be anywhere between, let's just say, like for example, the one that I always use, roughly the 382 region right there. Okay, so then you would have had a very good setup right here. Okay, as soon as you saw this massive wick bounce into there, let's say you set your stop loss slightly below for about a 3% loss there, and let's say you even targeted about the 382 range, which actually hit it with flying colors, you would have actually profited about 19%. So some people will actually only wait very diligently, very patiently for that one single play. And if it was one single play that they want to take at the 0.618 level, and they targeted the 382, then you would have actually made a 20% gain. So the people that are playing with, say, $100,000 and up, well, if they took that one single trade there, they would have been up about $20,000 within just a few days, right? So that was a really good example as well to be showing you guys. So let's see where else we can actually give you guys a good example, right? So we take two extreme points right now, which will basically be from these particular regions down over here, okay? And to the highest region up to over there. What you guys are noticing is that the 382 level is not really holding, right? The 618 level is not really holding right now, and we're kind of in between two regions right now. For Litecoin, for example, right now would be a very good time to be considering laddering your buys, right? Just as an example, if we look at a current one for Litecoin, So if we take a look at more extreme ends right here, okay, let's say we're taking a look at it actually from the breakout of March even, right? Two extreme points, one right there and the second one right there. What do you guys notice, okay? What you notice is a really strong reaction around the golden pocket range. So if you had actually entered a swing position from right there, you would have entered a position right there. And then the next thing you do is you take your Fibonacci from the top point there to where it went to the bottom right there. Okay, right there. And where would you guys have targeted? You would have targeted anywhere between the 382 and the zero point 0.5 Fibonacci region, just as a general rule, right? You can always target higher than that, but most of the time I'm finding that it's bouncing off of these regions where I would recommend that you take some of your profit. Okay, take some of your profit, maybe 50%, maybe even more. It's up to you guys. And then if you find another bounce, right, you can add more to your position. But let's say that you followed this particular setup where you were entering your trade at the 618 Fibonacci level or even the golden pocket range, right? You would have set your stop loss for after all of those formed, right? You see that, okay, it's actually going to bounce off of those regions. Set your stop loss for slightly below the actual golden pocket range. Target at least a 382 retracement level. And then you would have, or even the 0.5, right? Go to 382 and we see we shoot right past it, right? So the next logical target would be to not close your position and then you target the 0.5 Fibonacci level. And what do you guys notice? You would have made yourself an 83% gain, guys. 83% gain. The people that are very patient and they only wait for one trade, if they played a $100,000 position, they would have made themselves a very, very, very ridiculous amount of money. If you played a $100,000 position, you would have actually made an $80,000 gain on there. If you played $1 million, you would have made yourself $800,000, guys. Okay. So you can see the potential of these particular coins. So let me just show you guys a little bit more, okay? Let's just look at a lot of different coins. Let's look at EOS now and use the exact same method, okay? So now on the daily chart right here, this is the daily chart right there. I don't want to go to a log scale, okay? This is the daily chart right here. And make sure that your drawing favorite tools are up right here. Take it on the most extreme points, one up there. And when you start the downtrend, be patient, guys. Be extremely patient. Sometimes people only trade like once every 3 months, right? And they're waiting for literally that prime opportune time, right? So as you see it coming downwards and you see it coming downwards even more, at every single level, you're seeing some sort of reaction, right? 382 level, actually not too much at all. I take that back. At the 0.5 level, we're seeing a reaction between the 0.5 and the golden ratio, that is 618, but that's not really a big enough reason to enter long yet, right? So let's say that you entered at the golden pocket because you were just waiting for the golden pocket. Well, guess what? It actually hit it, guys, okay? So the next thing you do is you take your Fibonacci retracement from up there to where this particular range is right here, okay? We tried to target the 382 to the 0.5 region, but it actually never hit it, guys, okay? It never hit. I'm going to stretch this out a little bit more just to give you guys a clear-cut example, okay? It never actually hit the 382 or the 0.5 region, right? So you have to make sure that you're spotting these particular signs of bearish divergence. They're not always going to work out. But if you did enter a trade right around there, okay, after this candle forms, this green hammer candle, that's where you would probably want to enter a trade realistically right around there or even in the middle of it. Set your stop loss, take a 3-4% stop loss as always, or even lower. Maybe some people prefer only 1 to 2% that they're risking, right? You can target around the 3-2 level, but it never hit it, right? So once you spot these bearish signs of divergence, you could have still made yourself a really good 30% profit. Now let's say we cleared all this up, okay? What I've been finding for the flavor of 2018 is that we're finding heavy support at the 786 Fibonacci level. So if you guys notice right here, 786, what we see clearly is that the 618 Fibonacci level just didn't hold, guys, right? It just simply didn't want to hold whatsoever. Right around here, right? The 0.5 level didn't hold. The 618 level didn't hold at all either. But what held very strong is this particular region, the 786. And it held for a lot of reasons, right? One is a Fibonacci number. Secondly, as well, it's also meeting a lot of support around this cluster region right there. So keep in mind that what was formerly a resistance going up, on the way down, it will actually act as a support, right? So once these things will actually act as a support, make sure you guys are taking those chances on your bounces, right? So then you would have entered your position right here, guys, right? On March the 18th there, okay? Definitely enter on there because you're finding a lot of reasons. On the daily, we're finding a massive doji candle. So that was a great reason to enter a trade, right? And what you'd want to do is you would want to ride it until pretty much the MACD crossover or until you're spotting tons of signs. So here you would have missed it, right? No MACD crossover or anything like that at all, right? And how would you have caught it all the way up to the top there? You would look on a lower time frame, guys. You would look on a lower time frame and incorporate different methods, and that's definitely for us to determine. So the way that I would have played this, right, and it's pretty much what I did, is I would have entered at the 786 Fibonacci level right there. Okay, I would have set my stop loss slightly below it, right? For it's up to you guys how much you want to risk, right? I'm okay to even risk 10%. That's me, guys, right? Because my probability of winning is pretty high. But let's just say you risked slightly below the 786 level or slightly even below right around these particular levels at a 10% loss. Up to you guys how much to risk. But there was a lot of confirmation already to enter. And that it was going to be a fairly good run, okay? So check out your RSI as well, okay? You can go to a higher time frame. So on here, on the daily chart, what we're seeing is it's reaching some very, very, very oversold region, or sorry, overbought regions already, right? As you're starting to see it reach these extremely overbought regions, go to a lower time frame always, okay? Once you go to a lower time frame, you can see, for example, using a 55 moving average crossover strategy. Now, catching the top would have been very hard, right? I definitely wouldn't have caught the top at all. I would have looked for a pattern that was forming, like this one, for example, to see if it would actually break up or down. Right, this pattern formed, and the moment that it actually broke down is where I would have taken my profit because I realized, hey, this is reaching the top right there. So using this particular strategy, you would have made yourself a 306% gain, guys. That's a ridiculous gain on EOS right there, right? That's incredible, incredible gain in my personal opinion, okay? So if we look at it on the upside as well, now that we've got take the most extreme points, this is the bottom, this is the top right there, okay? What we're noticing about here is that it's reaching basically a ladder zone where you should be interested in buying EOS, in my opinion. Keep in mind, there's a lot of news right now for EOS coming out. So I personally like to ladder my buys in between the 0.5 and the 618 Fibonacci region like that, okay? Then I would definitely add more weight as it gets closer to the bottom. Now, I don't know if it's going to hold exactly at the 618 level for EOS, for example, but it's one that we always like to take chances on them, right? So let's look at IOTA, guys. Now, do this on every single coin, guys. Backtrack every single coin that you're trading, okay? And you're going to find that it's very, very relevant. So here, from the beginning of time, take it from the extreme points down here to up there, okay? What do you guys notice? What you're noticing is that 786, right, near the end of the year is where it was retracing in November there. So it didn't exactly hold. Like you guys could have tried to enter you guys could have tried to enter a trade around this at the 618 level, right around here, but that was very extreme, right? Very extreme. You could have entered a trade there and and let's just say you entered at the 618 level, right? Which candle would have been very good to enter on? One with a very bullish candle. So this guy right there would definitely be one of the most bullish candles, right? So then you say, wow, that's a really long wick that rejected to the downside. So now you set your stop loss maybe 1 to 2%. Just take that risk, okay? Say 3%. And then you would have targeted, let's say you drew your Fibonacci from up here all the way to down there to where that point was. And where do you guys first target? You target the 382 level, right? The 382 level right there. And what you find is that it actually hit it with flying colors at first, right? And you made yourself a 37% gain there, which was phenomenal. So let's say that you're looking at it on the downs or on the upside rather right now, right? And what you're finding is that this one is hitting that particular region right around there. right? This is a 786 level. And you combine other strategies as well. And you're finding some sort of wedge pattern, right? No doubt about that on IOTA. That's where I was urging everyone to purchase IOTA back all the way in October, November range, right? We're getting some sort of ABCDE pattern in here. And once we get this ABCDE pattern, you would have basically bought it right on the breakout, and because it was at the 786 Fibonacci level. 786 Fib level is a very powerful number, guys. It bounces off of there quite often as well. So how would you have targeted near the top? I think we went over that in another video earlier already, but now that you're in this position, okay, you're going to go into a long position right over here. You would have set your stop loss for perhaps slightly below this particular range to take a very small loss if something did happen, right? This is zoom in a little bit. You would have entered on the breakout. You would have set your stop loss slightly below it for about 3-4% loss there. Not much, guys. Don't ever risk a lot. And if you look on the daily, for example, right here, okay, right, this one here is getting a pretty good high. Just ride that thing, guys, until you see a possible MACD crossover. This one here, you definitely could have, if you wanted to, take your profit there because it was almost crossing. But of course, the best thing to do, in my opinion, guys, right, is once you have entered a position, ride that thing according to the moving averages, specifically the 55. I mean that the 55 is a really powerful number, okay? And you would have basically sold it when things have crossed over to the negative side. If you wanted to really catch it near the top, go to a lower time frame, like I've always been mentioning, right? Go to a lower time frame once you're now in that position and sell it once you see a crossover. And the crossover would have been about right here, okay? Crossover range would have been right there. Definitely crossed over there, and you would have yielded yourself still an 850% profit, which is a really big profit, guys. So Fibonacci retracements are honestly a magical thing. It's one of the most beautiful numbers in nature, or ratios in nature, for the golden ratio, and I highly encourage people to take profit, or sorry, to enter a position when you're near those levels. So if you actually take a look right around here as well, it didn't actually hit any type of Fibonacci number. It doesn't always, guys, okay? It doesn't always hit it. But if I take it from the bottom here, it still doesn't hit any type of numbers, right? So Fibonacci doesn't always work, but we try to make note of it. If we take it on the most recent one right now, what we'll see is, according to Fibonacci, let's see if it hit any numbers as well. We wanted to get near the 0.5 to the 618 region. It's actually getting very, very close. This particular zone right here might be a very strong buy zone for a lot of people to enter a long position, right? Let's see if we can actually get this to work on a lot of other coins as well, like Ripple, okay? Ripple retraced very, very heavily, guys, okay? It retraced extremely heavily, and it's one of those coins that took a beating because of all the fundamental news, but I still believe in Ripple's future extremely well, guys. So if we take a look at Ripple, it didn't exactly hit either, if you've noticed. But what are you finding correlation between IOTA and Ripple, okay? What you're finding, the correlation between IOTA and Ripple, is that this particular region happens to be in between the 100% retracement and the 786, right? It's more so in the middle. If I take it here, it's definitely in the middle range. And if you guys notice on XRP as well, it's definitely in the middle zone, right around here, right? Where it retraced to originally. Here, on February 6th, it actually got slightly below, okay? Now, what I always recommend as well is when it gets near a very critical point, so this critical point would have been the 200 moving average right here, right? So right there, this is the 200 moving average, where we actually found a massive hammer candle on the 200 moving average in between it. So personally, to me, I definitely would have entered a trade as soon as I saw this candle form, okay? I would have set my stop loss for slightly below the 200 moving average, say. Actually, I probably would have waited until a better candle formed above it, okay? That's the truth. I would have waited for a better candle above it, say around right there, that particular range, and I would have bought it on the breakout right here, guys. Buy it on the breakout. Now that sometimes patience is a virtue, guys. Like, it's a virtue, and guys, I'm not kidding. Like, you got to be very patient for these setups. Don't ever feel rushed to enter a trade. Once it breaks through there, set your stop loss for slightly below it, okay? About 1 to 3%, whatever you guys are comfortable to risk. take your Fibonacci retracement from the top, the most extreme ends, to the bottom of where it actually got to, okay? And what you see is it didn't really target the 382, right? It didn't even hit it or come close to hitting it. So you always want to generally target the 382 range, but sometimes it only hits the 236 range as well, guys, right? So we have to make sure that we understand how to spot a possible downtrend. So let's say we entered around that range, go to a lower time frame now, guys. Okay, go to a lower time frame. And then what you want to do is you want to sell it when it crosses over, like that, for example, right? The moving average strategy. So you actually would have targeted right around there. You don't know exactly where it's going to be, right? But you clearly see here in hindsight that your risk to reward ratio was literally 9.5 to 1, right? Huge risk to reward ratio there. So the target originally would have been roughly around there. I guess you could say that, your target ahead. Sorry, with the 55 moving average strategy, you don't exactly know where your target's going to be. But if you incorporate Fibonacci retracement, you get a basic general idea, first of all, of where these Fibonacci numbers can actually give you a target. So let's say we targeted the 382 region first. That would have given you a risk to reward ratio of literally 30 to 6. It would have been silly not to take that trade, in my opinion, okay? So now you go to a 4-hour time frame and you say to yourself, okay, it doesn't look like it's actually going to get there. So you see that it's crossing over there with our 55 moving average strategy that I've been talking about a lot. And what you clearly see is that it's crossing over right there, guys. So you would have closed your long position and you would have yielded yourself 30.4% as well, which is phenomenal, right? Phenomenal trades that we're finding all across the board. So yeah, so let's look at over here. Flash crash happened already. That was a pretty cool flash crash. You guys remember that one, right? You would take your Fibonacci from the extreme ends from here to about right there. And we're finding that Ripple is definitely reaching a golden ratio zone right now, okay? It's reaching the golden ratio zone of the 618 to these particular regions. So right now we're at about 66. I'm extremely interested in Ripple right now because it's reaching these particular zones. So if I give you guys an introduction, a Fibonacci extension, we take your first point right there at the bottom, the second point of the high, and the third point of where it originally got to. And then you see that a possible target is easily $1.14 by targeting a 1-to-1 extension. So you buy it on the golden ratio. If it doesn't actually work out there, you might want to consider laddering your buys, right? Ladder your buys, ladder to get you the best cost for your coins, or sorry, the best average for your coins there. And your target would roughly still, if it got to these levels, your target would still be roughly around $1.07 or $1.08. So that's a really good example as well, in my opinion. So let's just keep moving on and just hammer out these examples, guys. I want you guys to get tons of examples on your belt. Let's go to let's go to EOS, guys, on a very low time frame. How about that? So let's go to, for example, a 1-hour time frame for more so the day traders out there, right? Day traders definitely want to consider these particular regions. Let's say after, February 6th, right here, okay? So let's say we take two extreme ends and we only see, we see this happening right here, okay? We see all of this happening right here, right? And now you're just waiting to time it because you missed the original 5 days. Believe it or not, a lot of traders, guys, they don't even trade like the first up, or let's say the first wave up, because they miss it. They wait for the right time to enter for the next wave. Let's just say that you saw only this forming because you were waiting for a major correction, right? Or even, yeah, that's a good example. So you take your Fibonacci range. Where did it get to? Right around here. Okay, Fib range from right there to right up there. Okay, so you take the extreme ends. So the range that we were taking is going from down there to up there. And what we're seeing, first of all, is it bouncing off of the 0.5 level. And then here, we're seeing it bounce off of the 0.382 level as well, right? Definitely, we're seeing that. Bounces off of the 382 level with a nice candle. In fact, with a hammered candle that formed after that. Enter trade around there. Set your stop loss for slightly below the last swing low. This would have been a fairly big percentage loss though, at about 6.5. And now you can target roughly, say, of the whole thing, right? Of the whole thing, what would you have targeted? Well, let's say you take it from the extreme ends as well. So from up here, just as an example, to down here, as an example, you would target roughly the 382 region, okay? The 382 region to the zero point 0.5 region right around here. And what do you guys notice? It hits it with flying colors. So you could have made roughly a 14% gain if you were noticing the bearish signs of divergence right here. If you wrote it a little bit higher, right? Want to confirm that downtrend before you exit a trade pretty much to make sure that you're maximizing your potential profits. You sell it, say, on a lower time frame right here, okay? You sell it on a lower time frame, and that's where you're starting to see all of these lines crossing over according to my moving average strategy. So here you would have still made a 16% gain there over just a few quick days as an example, swing trading and looking at it on a very low time frame. Let's say you're looking on a 30-minute time frame even, okay? On a 30-minute time frame, from what day, let's say after a really large uptrend, okay, guys? Let's just choose a random day right here. So right here is April the 19th, okay? Or sorry, March the 19th right here. So on March the 19th, we see a major uptrend going up. Take two extreme points from right here to right there. What do you guys see? What you guys see is that there's really no reaction at the 0.5 Fibonacci level, but what you're seeing is pretty much bouncing right off of the 618. So as it gets closer and closer and closer to the 618 Fibonacci retracement level there, I'm always laddering my buys, right? Almost in the middle or the last three quarters, laddering my buys, right? Where would I target? I would take the two extreme ends, let's say from up there to even roughly right here, okay? I wouldn't do that one. I would take this one right there. That's more relevant on the downtrend, okay, right? Because we haven't had any major ups. Where do you target? You target roughly the 382 range to the 0.5 range right there going upwards. And actually, this one's a great example of a short because we haven't really talked about shorting too much, right? So you go into a long position right at here where you're getting your dollar cost average, set your stop loss after you see a confirmation candle, take your stop loss around 1 to 2% right there, go long on it, of course, and then you would target 382. You see it shoots right past it. So next viable target is the 0.5, but you're actually seeing it shoot past it again, guys, in a 30-minute chart, right? You're seeing it shoot past it again. So you don't take your profit there. The next place you would take your profit is the golden ratio, right at the 618 level. So here you guys would have made a 22% gain on its short time frame in just a few short days. So because, guys, it's very great to enter a long position at the 618 level, it also is a great place to enter a short position as well at the 618 level, okay? And I'm going to show you guys what I mean. So let's say that this retraces. So on the downtrend, what you want to do to see how high the target will go up is you click on the high point first and then the low point second, which is the other way around as if you were to go long. So on the short side, a lot of people who believe that it's still bearish, they would actually be targeting to enter a short position right around here, guys. That's where they would want to target, okay? And then where they want to close their position, they'd want to close their position like this. So then you take your Fibonacci retracement from the opposite extreme end from here to here. So they're entering a short position from up here at the 615 golden pocket range, and then their risk to reward ratio for a short position would be something like this. Set your stop loss for slightly higher than there, okay? And then you would target the 618 level, which is an easy 20% gain as well over a few days. So this position could have been played over about 4 days, and you would have made yourself 20% on the short side, guys. That is honestly kind of crazy when you think about it like that, right? So I'm going to cover a lot more information in actual Fibonacci retracement and, in the next lesson for Fibonacci extensions, because it's really difficult to learn about Fibonacci retracements without also understanding Fibonacci extensions. So this video will actually be a shorter video, less than an hour. I think we're almost there already at that mark. So I'm going to particularly end this video right now, or this lesson video. And the next one will actually be much, 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 much longer, guys, because to get a good grasp on Fibonacci retracement, we have to understand Fibonacci extensions as well. So just to summarize what Fibonacci retracement is, it's a way for us to use the Fibonacci sequence of numbers or the set of numbers to incorporate it into day-to-day trading and use those ratios obtained from the Fibonacci numbers to spot them in charts as well. Because they're commonly found everywhere in nature, we'll also commonly find it in the charts as well. And what we want to take away from this, the most important thing to take away from this particular lesson video, is that the golden ratio at the 618 Fibonacci level is definitely one of the most powerful numbers in nature. Once again, you can find it everywhere in the universe, and I find it a very fascinating number to talk about, a fascinating ratio as well. So make sure you guys are always trying to buy at the 618 level, and make sure that you're sticking to your stop loss as well. So I'm going to get to a lot more detail in the next lesson video. I really appreciate you guys watching this video. I hope that you've taken a lot away from these videos as well. I know that we're very much so near the end, but you guys are not even close to near the end as well as I am, right? We're far away from the finish line, guys. We always have to remember that trading is a marathon, right? It's not a sprint, and you guys never ever think that you know everything. The moment that you think you know everything will be the moment that your ego ends up taking over and you've almost admitted defeat in terms of saying, yeah, I think I'm the best out there. If you guys ever think that you're the best trader out there, think again, because there's always going to be some other superstar that will rise to fame that's going to make you feel like you know nothing as well, right? I know a lot of people who are extremely good traders, and I have a lot to learn from them as well, okay? So other than that, guys, I hope you have taken a lot away from the Fibonacci retracement video. I hope that you have a really good grasp on the fundamentals, especially, and keep in mind that Fibonacci retracement is a very advanced strategy to be using. So I'll see you guys for lesson number 16, which will be the second final lesson before we actually get into my strategy. So thank you very much for all the love and the support that you guys have given me. I hope that you guys are definitely excelling your trade and taking it to the next level. And I will see everybody for lesson number 16, where we're going to talk about Fibonacci retracement and Fibonacci extensions in very high detail. So have a great day, everyone. I'll see you for lesson number 16. Bye now. Take care.